good day subscribers, welcome into today's video. What I want to show you is everything I was just looking at essentially in regards to real estate data. We are starting to see a lot of cracks in the real estate market, and whether you're somebody that's thinking about buying a property, selling a property, whether you're somebody that's looking at housing stocks and wondering if it's time to get in those or anything like that, I think all the data I'm going to show you in this video is very important to just understand and kind of look at so you can understand what's going on in the market and where the real estate market is likely headed, okay? And I can tell you it is no bueno, okay? And I've always felt like this summer was going to be the summer where we really start to see a lot of cracks in the real estate market, and it's playing out definitely that way, okay? So I actually want to start in my city, Las Vegas, here at the start here and just kind of show you what's going on here. There were 2,688 single-family homes that sold in June. That's down 8.2% from May, and that's down almost 25% from June 2021. So yeah, I mean, when you start talking about numbers are down almost 25% year over year, that's a pretty darn big number. That's nothing, that's no small feat, right? Look at this. This shows you single family market trends. We're looking at the number of new listings. Once again, this is looking at Las Vegas. And yeah, I mean, you know, we just hit pretty much records, right? And this is all happening very, very quickly. Like literally just over the past few months this is happening, right? Look at availability, just skyrocketed up here recently. So when you're looking at things like this, you got to understand if you have a bunch of new listings coming on and you have demand going down in a meaningful way, that just seems to be getting worse and worse and worse. Obviously, it's not a good situation for a housing market if you're thinking about, you know, sales, if you're thinking about selling price, because eventually if you have all this inventory building up, right? And you have demand going down, what has to happen? Prices have to start coming down and coming down in a pretty meaningful way. Look at this here. This is very important. This is very telling. The luxury real estate market in Las Vegas, there were 147 homes that sold in June for $1 million and over, compared to 167 homes, a 20 home decrease, okay? Now, the reason I think this is important is think about usually the most sophisticated buyers of real estate. It's going to usually be the luxury market, right? Those folks are usually always going to have the most educated realtors to kind of represent them in these situations, right? They're usually the ones that pay the most attention to what's going on in the market. And if you're thinking about a group that would think about timing the market a little more, right? It's definitely the luxury end, because they're dropping several $1 million. They usually have businesses or investments, and so they can kind of see everything that's going on. And so if that market starts to pull back, right, it's definitely something that I think everybody else starts to kind of look at and like, oh, luxury's pulling back here. What do they know, right? What do they know? I think that's that's definitely an important factor, right? Now, Americans are canceling deals to buy homes at the highest rate since Rona started. The share of sale agreements on existing homes canceled in June was just under 15% of all homes that went under contract, according to a new report from Redfin. That is the highest share since early 2020, okay? And so cancellations were about 11% 1 year ago. So cancellations are definitely rising quite substantially. And, you know, that's showing no signs of kind of slowing. The slowdown in the housing market competition is giving home buyers room to negotiate, which is one of the more reasons for backing out of deals, says the chief economist at Redfin. Buyers are increasingly keeping rather than waiving inspection and appraisal contingencies. That gives them flexibility to call off the deal if issues arise during the home buying process. Home builders are seeing even higher cancellation rates. Even before the sharpest increase in rates in June, cancellations in May jumped 9.3% in a survey of builders. So, okay, so we're seeing even cancellations from home builders now. And man, this is all playing out pretty darn quickly. And this is just the early innings of this game, right? I mean, remember, 6 months ago, we were still in a red-hot housing market. So think about how much things have changed in just a 6-month span. We went from a red-hot housing market to literally all of a sudden it's like cancellations going up, inventory's going up, everything's going, getting worse and worse and worse by the month. Buyer remorse and cancellations shortly after contract are increasing. Builders, state buyers are nervous about the potential recession, struggling to get comfortable with higher payments, or expecting home prices to decline. Okay, so this is all playing out very quickly right in front of us. Now, the consumer confidence, and I've shown this in a few of my stock market related videos, is through the floor right now. It's in a very bad place. And the reason this is so important when it comes to real estate specifically, I mean, this is important for the overall economy and, consumers spending money out there, but this is very, very important for real estate. I think this is one of the most important things for the real estate market overall. And the reason being is, think about it. Like, what's the biggest purchase almost every single person ever makes in their life? For almost everybody, it's the home, right? It's buying a real estate property. And that, whether it be one that they actually live in or whether it be for one to try to rent out, right? And so here we are in this moment in time where consumer confidence is pretty much the lowest we've literally ever seen since they've been doing that, right? From the Michigan survey there. And so we're in this situation where folks aren't confident. If they're not confident, they're not going to go out there and spend money on real estate. That's just bottom line. And the more and more unconfident they get, right, the more and more they're going to you know what? I don't really need to go buy a new home right now. I'm going to just stay wherever I'm at, whether that means to rent or whether that means in their current home or anything like that, because they're not confident. And if you're going to buy a new home, you usually have to be pretty darn confident to make that decision at the end of the day. Now, this is from Realtor.com. This is active listings. So basically in June, we just went up almost 19% year over year. Now listen to this. This is going to blow your mind. That number there, that's the highest increase on a month over month basis we've ever seen, and on a year over year basis that we've ever seen. And so that's incredible. That's absolutely incredible. Like, for that rise. And so what this tells me essentially is a lot of folks are looking at the real estate market and kind of thinking, oh boy, I'm hearing prices are starting to fall. I'm hearing demand starting to fall. I better list that property I have, right? And so that's a situation we obviously have playing out. And when you have the highest rise on a year-over-year basis in active listings that you've literally ever seen, I think is definitely something worth taking note, right? And imagine, as the snowball gets worse and worse and worse, right? If that happens over the summer and the July numbers come in even worse and, demand's just not there, you're going to see even more and more properties hit listings, right? Now, if we look at U.S. housing starts, this is a situation where, housing starts obviously very recently have gone, to pretty darn high levels. We've only seen it a couple time periods in history where housing starts were higher than now, right? Now, if we're looking at a couple time periods in the past, these are very important, okay? This time period here, this was when baby boomers were all basically moving out of their parents' homes, right? All during this time, and we're starting to go have families and get married and those sorts of things. Because remember, the baby boomer generation, which is just a massive generation, right? Those folks were born between 1946 and 1964, okay? So during this time period of the 70s into the early 80s, all those folks were moving out of their parents' homes. And, there was just a big need for housing during that time. They were having kids and life was going on, right? Now, the other time we saw new housing starts in the United States of America go to these sorts of levels was obviously during the housing bubble. And that was its own huge situation. I don't think I need to go over the whole history of the housing bubble and everything that happened there, but we all know how that ended, right? It ended, not in such a good place. And, to even get back up to normal levels for housing starts, it took years because we got so overbuilt. We got so overbuilt, it was insane. It took years to get, even back to somewhat normal, housing starts, essentially, right? And here we are recently, where housing starts have gone insane. Now, think about this for a moment. I think this is very important for everybody. Think about this. If you have a new home that's being built, right? Usually what you're going to do is you're going to sell your old home, either because you want to or because you have to. That's what most people do, right? Every once in a while, somebody might keep their old home and use it as a rental or something like that, right? But for most folks, if they have a new home that's being built, they try to sell their own home. So with housing starts being incredibly high right now and all these new homes, about to be delivered over the next 6 months, let's say, for instance, that's going to mean a lot more homes in basically almost every single market, and especially the ones where there's a bunch of new homes being built right now, right? That means there's going to be a ton more used inventory that's about to hit the market, right? And in a situation where demand is not there right now and seems to be getting worse and worse as time's ticking on here in 22, and as you already have listings kind of skyrocketing, you potentially could have a ton more listings come over the next 6 months. Now, compound that with potentially a lot more cancellations for, folks, if they're looking at these new homes and they're going to cancel contracts, right? And also, think about this. A lot of these folks that are supposed to have these new homes built that are going to be delivered 3 months from now, 6 months from now, 9 months from now, these folks paid sky high prices, right? Because they signed off either at the end of 2021 or the beginning, a few months of 2022, right? And so those folks, if they see the real estate market get considerably worse, they might be in a situation where they're like, you know what, we're not gonna do that whole thing, right? Even if maybe we lose a deposit here or there, it's not worth it for us. And so that's definitely something to consider there, right? And the one elephant in the room we're not even talking about is if we were to get in any sort of situation where unemployment climbed in a meaningful way. So meaning unemployment went up to 5% or something like that. We've been in the threes. Let's say it went to 5 something by the end of this year. That might not happen. We might not see job losses like that. But if it did, that's an elephant in the room that makes everything far worse if that was to happen. And one of the reasons real estate dropped so significantly and housing starts dropped so significantly was not just that buildup of inventory during the housing bubble, but that was also compounded with a lot of folks that had lost jobs, right, and couldn't afford their homes anymore, and canceled a lot of contracts that home builders were obviously building during that time, okay? Now, if we look at the United States housing starts month over month, we just had a significant drop off. And actually, this shows you the month of May. We don't have the June numbers quite yet. But this was like a 14.4% month over month drop off in U.S. housing starts during the month of May. That's the biggest we can find other than right when we were in the Rona panic. Let's call it that, right? When everybody was, there was basically from March and April, everybody was super scared of the stock market. Everybody was super scared of real estate. And so, U.S. housing starts dropped off a cliff right there. But other than that one time period in the past 5 years, we've never seen a month over month decline that substantial in housing starts. And I don't think that's going to necessarily slow down. I think that's going to continue to be in a bad place for at least this year. I don't want to predict out to 2023 yet, but I think that's going to be in a bad place for at least this year, right? Now, mortgage rates are I don't want to say everything when it comes to housing. Jobs are the most important factor if you want to talk about the housing market, right? The second most important factor is the 30-year, because almost everybody that gets a house gets a 30-year. It's very common, right? Or maybe you get a 15-year. But at the end of the day, all those rates can kind of move together, right? So the 30-year has gone through the roof. I mean, we haven't seen the 30-year go up to these sorts of levels that we've been here recently over the past few months. We haven't seen it here since before the housing bubble went, okay? That's the last time we've seen mortgage rates where they are currently. And so this is something that obviously gives folks, pause for concern. And think about this for a moment. If the stock market was to be in a worse place, so let's say earnings season wasn't all that, then the 10-year could jump more, the 30, which would essentially make the 30-year mortgage go higher and higher. And that could be a situation where folks that, or just get priced out of the market because the 30-year just keeps going up and up and up. And remember, with folks that are building these homes right now, some of them don't have their rates locked in. And so all of a sudden they could be in a situation if that, they could afford it when the home was started back when, mortgage was 3%. But then all of a sudden, if you're talking about double that, can they still afford it? And I think that's a big question, right? And I think that's something we're going to get an answer to over the next few months here. And, especially when it comes to cancellations. And remember, if a home builder, somebody cancels a home, that's near completion, well, the home builder is going to finish that and they're going to put that on the market, right? And so then that inventory competes against that home builder's inventory in terms of somebody building the next house. It also competes against all the used homes now, right? And home builders can sometimes be pretty aggressive with pricing depending upon the situation. It just depends, right? Now, in terms of all the housing stocks, they're all obviously down. This is a 1-year chart, this is actually a year-to-date chart. Pulte, KB, Lennar, Toll, CCS, all these guys are down, right? They've started to come back recently, very, very recently, as we saw the 30-year not only moderate, 30-year mortgage that is, but actually trend a little down here. We've seen these stocks start to come back. But the issue is, I don't think, just the 30-year coming down a little bit is the magic fix. I think the 30-year's got to come down quite a bit more to start to ease and get any bit excited about the housing stocks, right? That's a hard situation to kind of see in the short term. The good news for the home builders is lumber has come down quite dramatically. And so that's obviously good for the home builders. Now, let me explain something about incentives. So when home builders are going through, let's say, a tougher time getting sales, they start doing incentives, okay? And what I've seen consistently is home builders 6 months ago were doing almost non-existent incentives because demand was so strong, their backlog was so strong. It was like, we're not doing any incentives. Like, good luck trying to negotiate with a home builder in 2021. That was near impossible challenge. Okay. Like, and if you went through that process, you know how tough that probably was for negotiating, right? Right now, what I'm seeing consistently is more and more home builders doing incentives. I will say I haven't seen them get desperate with incentives. I haven't seen them get to that point yet. Now, if new home sales remain weak and housing starts remain weak over the next several months, they will get to a position where they'll have to start getting desperate, right? And incentives, they'll have to skyrocket the incentives just to move properties at a point in time, right? Which, if you're in the market for a, let's call it a new build, well, that could be an interesting moment if you're in the negotiation leverage. And I can just tell you, like, for, about an 18-month span, folks were not in negotiation leverage when it came to buying a new home. And you might actually get one of those opportunities in the back half of this year and into 2023 if the real estate market continues to deteriorate. But yeah, I've definitely seen a lot more incentives from just about every single home builder. It's just I have not seen them get quote unquote desperate yet. They haven't quite reached that level. Okay. Now, average sales price, for a home sold. I mean, I don't think it takes a rocket scientist to figure out this sort of parabolic move is not normal. Housing prices should go up over time, right? And it should just kind of have a steady rise. But when you start looking like, you're a Tesla stock or something like this, okay, you're not normal. At this point in time, it becomes apparent that there's an issue. There's a problem. There's something went wrong in the housing market. And what went wrong in the housing market, obviously, is, hey, let's slosh a bunch of money out there like crazy. Let's, a situation where demand rises and supply is just very, very limited at that given time. And if you put all that together with pretty much the lowest interest rates we've ever seen, right? And all the stimulus money and all the money pump out there, well, shoot, that's going to be very, very bullish for real estate prices during that time. The problem is we have everything that was going for us in the real estate market is now working against us, right? No longer are mortgage rates at historically low numbers. Now they're the highest they've been pretty much since before the housing bubble popped. Now we're in a situation where the demand is going away insanely fast, so quickly, month after month after month, right? And supply is going through the roof. So yeah, it's an ugly situation for real estate for at least this year, for at least the back half of this year, and potentially into 2023, which is it makes sense, right? This type of stuff is not normal. But like I said, the one wild card is if we actually got job losses. If we don't get any meaningful job losses, the real estate market will just continue to be in a cold place for a bit. If we got job losses compounded, that's when you talk about a actual, let's just call it full-on collapse at that moment, right? And that remains to be seen. Hope you guys enjoyed this. Hope you enjoyed this data and things like that. Let me know if you enjoy a video like this. I usually focus most of my time on stock market, but I look at all these different economic things. And let me know if you got value out of this. Much love as always, and have a great day. And buy the dip and never trip.